Welcome to this explainer. Today, we're diving headfirst into the incredibly messy reality of multi-channel e-commerce accounting. We're going to uncover a clear, actionable roadmap to help you build the absolute perfect software stack for your business as we head into 2026.
Right out of the gate, let's address a massive trap. Why exactly does traditional accounting completely fail e-commerce brands? Well, traditional accounting just assumes you have clean bank deposits and a handful of neat little invoices to track. But if you run an online brand, reality is an entirely different beast. Your e-commerce payouts literally have to be aggressively untangled from an absolute mess of processing fees, chargebacks, and complicated tax components way before they ever touch your books.
These are what we call the unique friction points of modern e-commerce. We're talking about multi-channel consolidation, meaning you have to stitch together Shopify, Amazon, maybe TikTok Shop into one coherent view. And then there's payout reconciliation. Think about when Stripe or PayPal sends you a net deposit. It totally hides all those individual microtransactions. Add in highly volatile cost of goods sold, or COGS, and complex inventory valuations like FIFO, which stands for first in, first out. When you stack all of this up, suddenly your standard spreadsheet is in a battle to the death with reality.
So here is our roadmap for today. We'll start with why e-commerce accounting is hard. Then, starting out with micro and budget setups. After that, scaling up to the SMB stack. Next, some AI and automation magic. And finally, enterprise solutions for the big brands.
Okay, Section 1. Why e-commerce accounting is hard. The multi-channel reality.
The software landscape out there is absolutely huge. Look at this breakdown of 8 distinct software solutions, categorized by their core strengths and sync architectures. You've got the heavy hitters like QuickBooks Online and Xero that require third-party integration layers. Then there are AI-native tools like Finaloop, tailored specifically for direct-to-consumer brands. We also have enterprise beasts like NetSuite and specific gap fillers like Synder, Zoho Books, Wave, and Webgility. It is a lot to take in.
So with all those options, how do you actually choose?
Well, the right stack depends entirely on where your business sits on this growth timeline. The needs of a bootstrap micro seller making under $100,000 a year are just worlds apart from a mid-market brand scaling to $5 million. And that's totally different from a high-growth AI-first company or an enterprise crossing that $10 million threshold. Basically, your revenue and your transaction volume dictate your tech.
Let's jump into Section 2. Starting out, micro and budget. This is all about the bootstrap basics.
Now, if you're asking yourself whether you really need to pay for accounting software in year one, Wave Accounting is your honest answer. At $0 to $19 a month, it gives you free core bookkeeping and unlimited invoicing. It's a super sensible starting point for a brand new Etsy shop or a solo Shopify store. But there is a catch. It lacks built-in inventory tracking, COGS, and marketplace connectors. So the hard ceiling hits the exact moment you add a second sales channel. Suddenly, manual reconciliation is eating up all your free time, usually at 2 a.m. on a Sunday, right?
That brings us to another really fantastic early growth option, Zoho Books. What makes Zoho so special is its native connector-free sync with Zoho Inventory. If you're cost-conscious but you really want automation and inventory-aware accounting, Zoho Books is just an incredible value. It lets you build custom workflow rules well below the price of the big competitors. The only real trade-off, it lacks out-of-the-box connectors for niche marketplaces. So if you sell on hyper-regional or very specific platforms, you might actually have to build those software bridges yourself.
Moving right along to Section 3, scaling up the SMB stack. This is your $100,000 to $5 million revenue engine.
Take a second to think about this massive number, 7.5 million. That is the number of active subscribers currently using QuickBooks Online. With the user base that unbelievably large, it's pretty much the default general ledger for growing small to medium businesses. It is absolutely the undeniable darling of US-based accountants.
And that leads us to the ultimate head-to-head matchup. For QuickBooks Online, it definitely wins on CPA familiarity and boasts a massive Intuit app store for integrations. But out of the box, it does require add-ons for tracking your cost of goods sold and payouts. On the other side, Xero is the undeniable champion for international sellers. It has flawless multi-currency and foreign exchange handling, plus a wonderfully clean modern user interface. But, just like QBO, Xero also requires sync connectors to function seamlessly for e-commerce.
Because both of those platforms need connectors, you will inevitably run into tools like Synder. It basically acts as a high-volume reconciliation engine. What it does is pull raw transaction data from gateways like Stripe, PayPal, and Shopify payments. Then, it magically splits those confusing net payouts into gross sales, processing fees, refunds, and taxes, long before it ever hits your ledger. Complete with duplicate protection, it turns what used to be a painful forensic accounting exercise into a simple one-click bank match, a total game changer.
All right, Section 4, AI and Automation Magic, the Data Quality Rule. AI is absolutely revolutionizing this entire space. Meet Finaloop. It's an AI-native e-commerce ledger that completely flips the script. Starting around $245 a month, it bypasses traditional manual entries entirely. It offers what they call a zero-day monthly close. That means your books are perpetually current without waiting weeks to tally everything up at the end of the month. Add in built-in COGS tracking and continuous real-time reconciliation, and Finaloop gives data-driven teams an immediate, real-time snapshot of their gross margins.
But hey, remember the old garbage in, garbage out rule? Your ledger can only organize the data it receives. To truly automate your bookkeeping, you really need to follow these exact steps. Step 1, upstream operations. You need a layer like Easync.io to lock in real-time supplier costs at the exact moment of auto-fulfillment. Step 2, connectors. Use tools like Synder or A2X to decompose those complex gateway payouts into clean lines. And finally, Step 3, the general ledger. Whether that's QBO or Xero, this is where you record the flawless financial data. If you secure that upstream operational layer first, your ledger will reflect what you genuinely paid, rather than some patched-together historical guesswork.
Finally, Section 5, Enterprise Solutions for Big Brands, the $10 million plus endgame.
When your gross merchant value, meaning the total value of all your sales, crosses that massive $10 million threshold, well, stitching together separate, smaller apps isn't just a cute growth hack anymore. Honestly, it becomes a major operational liability.
At this kind of scale, NetSuite becomes the absolute gold standard. It offers comprehensive enterprise resource planning. We're talking about a unified ERP backbone for finance, inventory, and orders all in one place. It brings in multi-entity and subsidiary management, enforcing strict chart of accounts discipline across multiple warehouses, various sales channels, and different brands. It connects the whole shebang into one unified back-office system.
But what if you have a massive, mature business that is completely locked into old-school software? That is exactly where Webgility comes in. Webgility is the mid-market solution providing deep two-way sync for established companies strictly committed to legacy QuickBooks Desktop or Enterprise. Say you have a decade of history locked in QuickBooks and you absolutely refuse to migrate to a cloud ERP like NetSuite, Webgility acts as your heavy-duty integration layer for complex multi-warehouse syncing.
As we wrap up this explainer, I want to leave you with a pretty provocative question to challenge how you view your data quality. Are your books recording reality or just last month's receipts? Your accounting architecture shouldn't just be some afterthought you scramble to put together for tax season. It should be a real-time engine driving your growth. I really hope this roadmap inspires you to upgrade your stack, fix your data at the source, and take complete control of your multi-channel business. Keep learning, keep optimizing, and we will see you next time.